Hey everyone, welcome back to another cryptocurrency video. In today's video we will be discussing Bitcoin with relation to the inflation rate. If you like this type of content, make sure you hit that thumbs up, make sure you hit that subscribe button as it means a lot to me. And if you are a fan of cryptocurrency, I have a cryptocurrency shop where you can shop cryptocurrency products. I'll leave a link in the description down below so you can get a nice discount off your next purchase. So without further ado, ladies and gentlemen, let's begin with the video. And just yesterday we received data on the most up-to-date inflation rate, which came in at 3.2, which is a zero point 0.1 increase month over month from January. So January we had 3.1% inflation rate year over year. And in February, we now have 3.2% year over year inflation. So by definition, in this current moment of time, inflation is deemed as sticky. So what do we mean by sticky? Just to break it down simply, as the current economy is contracting and we are in a climate and an economy that is contracting because of high interest rates, inflation is stagnant right now. Yeah, and it's stagnant because inflation has been around the same level since May of 2023. So essentially a full-on year, and inflation has remained the same whilst interest rates have been higher for longer. So what does that mean? That means that the target of 2% that the Fed have out there, that they want inflation to go down to 2%, that's currently not happening. So what that essentially means is that the Fed is forced into a position where they need to leave interest rates higher for longer until the inflation rate can actually make its move down to that 2% target. Now the only reason why they are getting away with higher for longer, and I just want to make this clear, it is because the unemployment rate is still quite low at 3.9%. And I covered a video on the unemployment rate recently. If you haven't watched that, I suggest you go and do so because I provided an in-depth, detailed video on the unemployment rate and what that also means. And in these macro videos, we will cross over with interest rates, with inflation, with unemployment, with the money supply, etc. Most of them do cross over because they do play in each other's narrative. But the reason why the Fed can keep getting away with higher for longer until they reach their 2% target is because of the unemployment rate still trending at low levels at 3.9%. Yes, the unemployment rate is starting to trend to the upside, which isn't good news. But the Fed will need to do something very soon, because if the unemployment rate goes sky high, just like it did back in the pandemic and other prior recessions, if the unemployment rate goes sky high and the inflation rate is still sticky trending at that 3% level, then the Fed will ultimately be forced into a position where they will need to cut rates, but that will come at the expense of re-accelerating inflation, which isn't good for the economy, because what inflation actually is the cost of goods going up over time because the demand is there. It looks like people are starting to spend their money again, hence why the price of goods, it could be any good like eggs, milk, bread, anything in infrastructure, anything in food, anything in exporting, importing, it could go up because a lot of people are spending money again. And a prime example of this was during the pandemic in 2020 when the Fed printed $6 trillion and provided stimulus checks, which just made people spend like crazy. And the reason why the Fed done this is because they wanted to pull the economy out of trouble during that brief recession caused by the pandemic. The only way to get us out of that mess that quickly was to print that many dollars. But when you print that many dollars, inflation goes up because the supply of fiat goes up and the demand for goods also rise at the same time. So what does this mean for interest rates? As I mentioned previously, it means that the Fed have to be higher for longer. If inflation is sticky but the unemployment rate is still low, that means the Fed will keep rates higher for longer. And just by looking at this tool, which shows the probability of what the Fed will do in upcoming FOMC meetings, it looks like in the next meeting, which is occurring next week from today, as today is the 13th, the next meeting is next Wednesday on the 20th of March. It is looking likely that the Fed is going to keep rates paused, and most likely that they're also going to keep them paused on the 1st of May, and the first rate cut is expected to occur on the 12th of June. Yeah. So what does this mean for Bitcoin? Why do we look at this and compare it to Bitcoin? Well, when we do compare it to Bitcoin, especially when we compare the interest rates, if I just overlay it, Bitcoin is a risk-on asset, just like stocks, yeah? It is very correlated with stocks. And when the markets are going through times of uncertainty and the Fed leaves rates higher for longer, risk-on assets tend to perform well because what they do is that they climb the wall of worry. That is why I believe that we are not in this euphoric bull market just like we had in 2020, but more so a combination of 2019 and 2020, because 2019 was a bull market of quantitative tightening, and that's what I feel like is happening now. But additionally, we have hit all-time highs, which is why it's also a run like 2020. But there's no euphoria there because there's no retail entering the space. I believe that this pump is not only caused by the narrative of the spot ETFs and the Bitcoin halving, etc., but it's caused by uncertainty in the market. And until that certainty comes to an end, Bitcoin's just going to keep climbing the wall of worry, as they say. And until the Fed comes to a decision of what they want to do, that is when Bitcoin will make its next move. And you can see last cycle, the first rate cut wasn't until June, or July. Yeah, no, it was July. The first rate cut didn't come until July, hence why the market peaked in June. Yeah, right here. So I feel like the same will occur again, which is why I don't feel like we're in that manic bull market phase, even though Bitcoin has hit all-time highs and all the cryptocurrencies are trending upwards and upwards and upwards. That is because there's so much uncertainty in the market, people are just going in. But until that bubble pops, until the first rate cut comes, Bitcoin will just keep on climbing higher and higher and higher. And the first rate cut isn't expected until the 12th of June, so God knows what inflation will be back then. If inflation essentially remains the same to the point where the Fed has to cut rates because unemployment is going up, but inflation is still around 3%, we're just going to get something like this, where inflation is just going to soar again, and it's going to be another problem for the Fed to deal with come next cycle. Do you understand? However, if inflation goes down relatively quickly from here, yeah, and the interest rates also come down together slowly, then you can argue a case of a soft landing, which might occur. But overall, we have to keep our eye on this inflation data because it is very sticky right now. Even though we are in a contracting economy, we have to keep our eye out on the unemployment rate as well. These are important metrics when it comes to analyzing risk on assets, just like Bitcoin and the stock market. So it looks like the pieces of the puzzles are coming together, especially in these next couple of months, especially when the narratives sort of fade for Bitcoin and cryptocurrency. I feel like the summer months anyway aren't particularly a good time for cryptocurrencies. So with all this confluent data, I do feel like in the summer, Bitcoin will likely cool off. But we just have to wait and see for the data in the next upcoming months. So if you like this type of video, guys, make sure you hit that thumbs up, make sure you hit that subscribe button. If you want me to comment on anything, please leave a comment down below and I'll do my best to answer it. And as always, it's been your boy J1 General. Thank you and goodbye.